start. Sorry, I'm just recording now. Hey, good morning. Morning.
Good morning.
How are you keeping? Happy New Year, everyone.
Happy New Year, sir.
How's weather you're in? Here in at the moment, it's quite cold, rainy. Hope so. I mean, your end is a nice weather. Okay, so we'll hope everyone will join us. So please, if you don't mind, can we introduce ourselves first? I think we never met before. I think so. A couple of you know me. My name is Anjum Sattar. I'm working with University last 9-10 years now, and I'm also teaching at the University of Bradford, and I do some work for leave. I do practice in accounts, and I'll try my best to meet your expectation. Background is CCA. I taught ATHE my courses. And please, if you have any question, drop me email anjum@ukversity.co.uk, and I'll try my best to get back to you as soon as possible. I'm available on the WhatsApp group as well. And plus, you can send me email as convenient for you. So we'll start, please. If you don't mind, if you quick introduce yourself, please. Either you member in practice or you work for someone. Please, anything you like to share, keeping in view of GDPR. If you don't want to share it, that's absolutely fine.
Okay. My name is Talat Chapi, and I'm working in accounting sector and in a care home. So I'm dealing all payables and payables and expenses and everything. I mean, the purchase side, covering 9 companies at the moment.
Great, thank you. And which city you from, Talat? Which
Sorry?
city you from here?
No, I'm from London.
Okay.
London. Can you hear me? Because I put on the earbud. So is it?
Yes,
Can you?
yes, I can hear you. And we.
You can hear me. Yeah, that's fine. Thank you.
Okay, thank you. Yes, please. Who's next, please?
Good morning, everyone. Once again, my name is Alimat Yusuf. I'm a chartered accountant. I am in the practicing manager for an accounting firm, and I also act as a CFO for a UK charity, which is being audited. I live in London, and I'm on this special course because I intend to get my practicing certificate with IFA. So I was required to do the advanced UK tax. Thank you.
Thank you, great. Thank you. Thanks for sharing. Yes, please. Who's next? Hello, can you hear me? Please, can we introduce ourselves?
Hi. This is Tavaraj. I'm based in London as well. I'm a self-employed accountant, working for another company part-time. So I was thinking of getting this UK tax updated regularly. So just want to take these exams and proceed further. Good to see you all.
Good to see you.
Thank you.
Thank you. Thanks for sharing. Thank you. We'll start. Yes, anyone else there? No. Okay, we'll start then, please. Okay, so please, during our delivery, if you have any question, feel free, always ask, so we'll go through accordingly. So today we'll go through our LO1 learning outcome 1. I'll share with you the things. We'll go through the unit specification first. Okay, welcome. Morning. Hope so. Can you see all, please? Unit specification.
Yeah.
Okay, welcome.
Yes.
Morning. Let's we'll
Yeah. That's,
okay. So okay, it is Unit 4 UK taxation for business and individual advance. Really, and the aim of this unit, we can develop our understanding about taxation with both in the individual and businesses point of view, and they will develop basic understanding. Most of you really working in accounts and you have the basic good understanding. So each lesson will try to cover one learning outcome. If any point you think you're not getting, we want to deep dive into, because of course tax is a area. It can be many scenario, and the main thing we need to learn about how we can apply that rates application is very crucial. So today our key focus will be understand advanced aspect of UK taxation system. We'll go through the LO1, which is learning outcome one, and under the learning outcome one, we have assessment criteria like 1.1, 1.2, 1.3, and 4. And if you want to work towards merit criteria, evaluate income and income tax liabilities in relation to trust, which we'll go through a big discussion on. When we'll go through assignment discussion further, we'll, enhance our understanding, we'll embed, various scenarios and examples. Okay, so that's our LO1, which we'll go through today. Our discussion will cover. And next lesson will be focus LO2, which assess, the impact of relevant taxes in a given situation. So we look around the tax planning in a given situation, how we can with the advantages and disadvantages and legal requirements. All will be in our discussion. And the third lesson will go to be able to apply the taxation, or the tax planning measures to the minimize or defer the tax liability. That will be in our discussion. The last lesson, which is in terms of the delivery side, which will be able to communicate the taxation information to all stakeholders. So we'll discuss about various stakeholders, why they need the information, and what sort of decision based on the information. Okay, so please each, the learning outcome, we have indicative content, what we're supposed to learn. So please, when we pay the assignment, this is the assignment based code. There won't be any exams. So please just, if you done ACC exam or AAT or any other, so this is purely assignment. In assignment, that is really, we need to focus on the learning outcome, and we need to add the example and good to be compare and contrast and evaluate. So it means 2, 3 different option use is always, is better to be included. Okay, so and the reference. Okay, income tax and the national insurance include the source of income tax, income from employment, self-employment, property and investment, and comprehensive calculation of the tax, which will go through the NI, national insurance, and these all, overall the gain, issues, calculation, liabilities, all sort of these, the points which will address overall our discussion. Inherent tax, which will go through 340,000 on, which we need to look around under the Finance Act, whichever act, you want to follow, because of course, we always good to be follow the current year act up to 31st January. We can follow 23, 24, and then of course 24, 25, and always good to be, which we look, these Finance Act and the rates, application. Then please, stamp tax includes, the scope of the stamps, taxes, liabilities, and will go value added tax, and under value added tax, VAT, different taxation schemes, which we can look around as well. Okay, so that will be our discussion. Please, on our Moodle page, we have available resources there. We have a books there, and please, if you want to set up your account on Open Tuition, I'm not sure you ever heard about, which is set by the London School of Business, and but it's available to public, so that's why we are using. Okay, so please, if you click here, ACCA, and you look around TX, which is Texas, which is F6 exam, so we can download the booklet, and we can follow the handouts, and if you click there, please is all the lectures, and if you want to deep dive into for the sake of your interest, so please do so as well. Okay, other than that, I will share with you IFA local seminars and events which will carry on arranging. Please, it's better to be attending online if you can. So if you go on IFA website and you, sorry, okay. Share with you and good to look around the CPD sessions. So please, these are some free CPD sessions. Please, you can attend or you can look around the IFA regional events, which is carry on happening. So in your local area as well, and are there online you can attend. Can you see all? And especially for the tech element. So that's quite good to explore. Okay, welcome. We'll start now. Please, if you have any question, you can ask, during our delivery at the end or during. Please, carry on. Don't hesitate to ask any question. Okay. LO1, understand the advanced, aspect of the UK taxation system, which we'll go through, as I mentioned, and always good to be reflect, how much we know already about income, corporation, and overseas tax element, So which is the key thing we need to look around the residency and the resident elements, as well. If you're not resident, what implications will be. Okay, so that's which we'll discuss. So please, that's quite crucial, the tax rate. For an NSEC 2024, that's, of course, and we look around the basic rate, personal allowance. So 12,570, please, personal allowance. And please keep in mind personal allowance, and if the partner not working, you can transfer the marriage allowance as well on your clients, if need to look around the tax planning is illegal. Yes, some expenses can be adjusted. We can request to the employer, and the basic, rate is 20%, but the dividend rate is 8.75. If you earn 37,701 after your personal allowance, then it goes up to 40%. If you earn between after 100,000, your personal allowance will be carry on reducing to half. So if you are earning 125, 140, your personal allowance will be finished. You have to pay the tax on all amount whatsoever you will earn. There won't be any personal allowance. So keep in mind, that's why a lot of people not prefer to go over the limit. That's maybe not working more hours, or they want something else to plan. Okay, so saving income, a nil rate band. So please, if the saving income is 1,000, and if is higher taxpayer is only 500. Okay, dividend income, nil band is all the tax is up to 1,000, and then of course, we look, the rates is according to. Okay, so please, that's, personal allowance, transferable amount, then income limit, 100,000. If more than 100,000, then of course personal allowance will be resident. That's please really we need to be look around tax purposes. Previously resident, we need to look around the tie, we need to look around the domicile, and we need to look around the scenario as the client. If we look these in our, and we can add examples. Of course, you're aware of child benefit and income tax charges if we look around, and if you're earning over 50,000, really we need to submit, the tax return. Self-assessment is becoming. Then of course, is the impact on the benefits as well, which we need to account for that. And of course, the car are benefit in kind, that's the big area really we need to explore about. Pensions. Uh, then of course we'll go through the personal allowance, capital allowance, and the capital allowance area for the corporation tax. Depends on which year you are dealing with. That's which we need to explore about. Uh, that's the small rate, and we'll go through the upper and lower and upper limits and the tipper relief or margin relief, which we discussed. Yes, penalty. That's good to know. Because inherent tax, please, that's really we need to look around connected person, the property transfer, and the rates. Capital gain tax, please. Annual exempt limit is 6,000. Normal rate is 10, high rates 20, and then so residential property rate, investor relief, all these we need to look around. NI, of course, NI contribution. Really, we need to look around these implies annual 1 to 5, 12,570, 0 if you're more than class 1, 12%, and above 50 is 2%. Implied, of course, again, now that's a big area to further explore about, because of course this NI is changed now, NI contribution for, and we need to look around again the finance sector. Okay, so this is please the key area really we need to explore. And in our assignment, we can discuss, some scenario and some element to address, our really learning outcome one. And the UK taxation system, we need to look around the professional and ethics standards, which we'll discuss. We look around direct, indirect taxes. We look, the tax avoidance, tax evadance, and tax planning. Yeah? Okay, so the tax law and the guidance. Act of Parliament and the case laws will carry on using in the court, especially, and does not have force by law. HMRC guidance on the website. Guidance help to interpret the tax laws, and wide range of the guidance published, including the statement of practice and working together publication. That's really we need to be look around. Okay, methods of operating businesses. We can think about sole trader, partnership, and companies. Of course, then you have to think about, you paying income tax, are you paying the corporation tax? That's the rates accordingly. Will you apply? And we need to think about, the NI contribution, class two, class four, the insurance contribution. Okay, so please the type of the income and the year, start and the end dates, really we need to look around, and we need to proportion of the income is falls in the two. Of course, if it's a new business and it started because accounting period and financial tax rate, so we have to do proportion accordingly. That's really we need to look around. Total net and taxable income, all the types of the income added together and is called the total income. Then the total income minus the trade losses. Please, trade losses, we need to think about, the carry forward and tax forward if it's the tax liability. So that can be up to 5 years plus 20 years if we can. The personal allowance deduct, from non-saving income first, and then saving income, and then dividend income. That's it. Look around for the guidance when we'll go through some calculation and example you can have. So the layout, the non-saving and the saving, broadly interest and the dividend income, which we can, and deduct, personal allowance. So personal allowance, how much we have now, which we mentioned, 12,570. Yeah. Okay, so tax avoidance, tax evasion, the tax planning. So illegal, deliberately misled the tax authority to reduce the tax liability and may result in the fine or imprisonment. Tax avoidance, currently legal to make use the loopholes to the tax legislations to reduce the tax liabilities, and the tax planning to ensure you made all the available tax relief in the manner intended to minimize the tax liability. Now, of course, tax planning is illegal. We focus more on the tax planning and we can advise to the. Okay, so allowable and disallowable expenses. So please, that's further is the area which we can explore, which I'll share with you the few books, the scenario when we are looking under the capital gain, under the gift, and of course, if you're giving donation and, that's we can relieve, which we can. And the gift to customer not costing more than £50 per donee per year, and which we redundant payment, that's, which we need to be look around uh, the limit, and we need to look around the leasing cost, omission exceed, and in a car point of view as well, which is of course 165 gram or so, and those which we need to are electric cars, and further we need to explore about the engine size and all. So expenditure and whole exclusively the purposes we need to be look around. Allowable and disallowable expenses, fine and penalty is not applicable. Depreciation, of course, please, if you have a profit and loss account, depreciation you have to add it back, because depreciation is not allowed for the tax purposes. Depreciation, diminishing, reducing, whatever method you use, it can be varies your depreciation. Capital allowance is allowed, that's really we need to look around. Then we need to look around the categories of the asset, whatever we can claim. Okay, so that's capital expenditure. uh, Entertaining, and the legal fees and all this we need to be related. We need to look around each individual categories of this, either can be exempt or not. Okay, next we looking 1.1 when we'll go in detail. If you work abroad, temporarily, and you need to be consider the tax position in the UK, overseas as a country are the separate. If you work overseas and you are likely to be taxable in the overseas countries where you work, whether or not you remain the taxable in the UK will depend on your residency position. That's really we need to be determined by the secretary resident test, really, which is we mentioned 109, 180 days, yes, and so on. That's which we need to think about the domicile, which we look in a minute, and that's which we need to be apply. Fewer than 91 days in the UK and have fewer 31 days work during the tax year. That's really further we need to explore, because if you're employed and like a lot of people, when even if the UK national going abroad and coming, of course they can't claim it until they live 180 days back in the country to claim things. So that's we need to be further explore about the residency rules accordingly, because it can be different scenarios. So we need to have different ties with the UK. Like let's we look in this case. These are few examples being included. uh, it's a company incorporated overseas, and all those directors and hold their board meeting in the UK, and the companies are incorporated overseas. Only treaties is being resident in the UK if they control and manage, and control is exercised in the UK. Then of course we can say they are liable to. That's overseas income tax. That's a lot of discussions. The company is not paying the corporation tax in, and because they carry on transferring the. So a lot of debates happen in, and a lot of rules going to be for that chair. So the director of the UK is based and hold, their board meeting in the UK, and they would indicate in this case, in this company control from the UK, and therefore the resident UK. If the director were to be based overseas, then hold their, the board meeting overseas, and the company would probably be treated as a resident overseas, since the central management and control would and then be exercised outside the UK. So that's control and manage in the UK, so they can liable to pay the tax in the UK. So during the UK, the 31st March 2023, the various limited company UK resident company receives an overseas dividend, and with the holding tax with the help from the dividend 15%. If various limited own 50% or less, so do we know what is the parent, subsidiary, and associate? So please, if your parent is own 50% or more shares, of other company, that's called the subsidiary company. If you own 20 to 49% shares of other company, that's called associate company. And if you own 20 or less than 20%, that's called simple investment. That's really we need to be look around in the control mechanism as well. Huh? Overseas branches, trade, the branches profit or assessment. Double taxation relief is a given where an overseas branch profit is also tax overseas. That's which we can, and because the tax being paid in overseas, and you don't have to pay the tax again. So overseas branch make trading loss, then the loss can be relieved again the profit in the US. So that's which we need to be further look into the detail, the rule of resident control and their control of it. Any question there from anyone? If you want to ask, you can. So capital allowance, we need to be look around the for sole trader, only the company don't have the private use assets. We need to look around the contain the car with the CO2 emission. That's we need to look around the benefit or benefit in kind as well as the companies, the companies can claim a lot of things in terms of the property, in terms of the individuals. So current annual investment allowance, which we need to be look around, millions, and will continue to apply, examine the period which we can look around. So that's, for our finance. Firstly, we carry on looking the written down allowance. 18% of the main pool are reducing balance basis. 8% in the special pool asset. Those assets fall in the special pool. That's written down allowance or capital allowance, which we can claim against our corporation tax liability or tax liability perspective. Okay, so 100% first year allowance available on the low emissions car, and that's tax planning purposes. Look around and we can advise to clients accordingly. Okay, so private use asset, and don't pool the private use asset used privately by the sole trader or the partner, not and implies, and we need to be show all the value of the asset and allowance in the column, which will go through personal allowance, which I'll share with you handouts in a minute. And that's which we can look around the some question and answer those examples which we can include in our assignment purpose. Short life asset, and which need to be the made disposal asset, which we can depool them, and we look, they can be used not long period of time. Their values carry on, those which we can explore further in a minute. Okay, so pro forma, please. Trading profit, interest, other income, property income, chargeable gain, total profit, less, any charity that donation being paid. That's a lot of companies, they set up their, the charities against as well. It's good to be basically the promotions as well, and the saving in the tax, taxable total profit. Okay, so interest income from the non-trading source minus, the interest payable of the trading loans. That's really we need to make adjustment, and the property income here is treated as a single source of income, calculated in the same way that the trading profit. Okay, then please we need to look around the company must pay the corporation on total profit in each accounting period. If we can look around, and long accounting period if we can divide it with more than, because 18 months like the first time, and then of course you have to separate and you have to divide into accounting period according. The rates, of course, the corporate rates really carry on changing. All the handouts, and you have to think about the current year, the current corporation tax, because it used to be 23, 25. Now it's 19% going down to the lot of discussion which we can further explore. So that's which we need to be look around these rates in the rate column. I'll go through in a minute. So our lab profit, which we look, and assessment focus. Of course, it's not your exam based, and we need to look around the assignment based, in some scenarios it we need to be included. then we'll do so we'll do assignment discussion and we'll pick some examples which I'll show you now. Okay, so these NI national insurance, as we mentioned, class 1, class 2, and we look unset 2024. Okay, in the carry forward, the loss can be carry forward up to, and please less can be in relief, which we can set up these losses up to 5 years, and always good to be please claim these losses first, and then your trading losses, company trading losses may be set against the other profit of the same accounting period. So we have to look around these previous 12 months and we can carry forward, which we look in a minute examples. Okay, so please performance which will carry on using trading profit less the loss brought forward. So those we can other incomes, net chargeable gain, what we have, trading profit, less loss relief that front are carry back or carry forward. We have a tax liability there. That can be so. That's a lot of what we said. The tax planning is illegal. Yes, so that's which you can plan according to the tax liability. Okay, so earlier release the cash flow advantage of release, tax saving offset total profit financial is account going for period which is divided property losses in the in the companies we need to look around accordingly, but individually a lot of legislation being changed, so we have to explore for that, which I'll show you when we do some numericals. Okay, so chargeable percent disposal of the asset. Chargeable disposal is the sale and the gift, and which we can look around in asset. Chargeable person, the companies are individual, and chargeable asset, the most assets are chargeable. Exempt asset included car or some chattels, which we look, the categories of the asset, those are exempt. You don't have to pay the tax, So we look the proceed, we look the cost, and we look the capital gain, and then we can include in our tax calculations accordingly. Okay, so please deduct, corporation tax and the individual, then we apply the rates. So rates we need to be look around, see a rates, please, the current rate, and which I'll go through in a minute. I'll show you some examples. And indexation, of course, if you're buying multiple, the shares at different prices, we have to index them. We look if we have the losses or we have the gain, we need to be look around indexing. And the part of the disposal. So please, if the asset being partly disposed of, so how much was the cost, and how much you have, if and the cost, how much is the proceed, how much cost of the it costs you to dispose of, and chargeable gain, so on the chargeable gain we have to pay the tax accordingly. Chattel is an item of the tangible movable properties like painting. The gain on the chattel sold for the gross proceeds 6,000. If it's less than 6,000, it's still exempt. If it's more than 6,000, you have to pay the tax on it. Okay, the maximum gain on the chattel sold more than 6,000. The cost was the less than 6,000. Yes, so gross proceeds minus 6,000. Then please we use this is generic formula which is given by HMRC as the guidance purposes. So times by 5 divided by 3. So we can look around gross proceeds minus 6,000. That's and then we can do and we calculate our calculations according. Okay, of course nowadays we have calculators. All the rules is embedded into, and those the formulas always carry on. As we mentioned, civil partners, and those we need to be look around. Buy an asset of 20,000 and give his wife Julie when the market value was 30,000. So deem proceed 20,000 and less, the cost 20,000 and no gain or no loss. So Julie based on the cost of the future disposal. So we based on the future disposal, the deem proceed. That's which we look inherent person, inherent property, it's not transfer property. That's further we need to be look around inherent tax, elements. Gift within 7 years, pre-death, other lifetime gift and the death. So these please connected person, lifetime, chargeable. That's 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 we need to be look around in accordingly. So the lifetime rates and the death rate and these paid donee are the donor and the gross of gift, and we can look some examples according to inherent chapter. So which I'll refer back to you in a minute. Okay, so please transferable value, the specific exemptions which we look according to the capital gain taxes and chargeable and transfer and less the nil rate, the band which we can look around. Okay, nil rate band that was 312,000. Now we look for the nil band. So 7-year rules for calculation of the death on lifetime, which we look around 325,000, 340,000, and then of course reduction. Gift, in 3 to 7 years pre-death, which we can, and the relief can be transferred, more than 80% of that can be a relief, so other than the value of the asset, which we look the limits, So the lifetime gift only annual exemption 3,000 pre-tax year. Carry forward first year only use the current before brought forward, and the small gift 240. Marriage exemption 5,000 from per parent. So if you're giving to your loved ones, like daughters, son, grandparent, yes, so these which we can look these the rates and we can apply them. Of course, we mentioned the resident really rules. We need to look around. We need to look around. Of course, for the employer allowance, and that's which we can look around into. And next, because today is the basic, we went through the rates, and the next, in that scenario, really we need to apply them. So what we need to look around, please. I'm going to. Yes, please. Anyone like to ask the question?
Yes, I do have a question. And the question is about company residency. Hello, can you hear me?
Yes, I can hear you now.
Okay, assuming I have a client, they have their company here in the UK, and they've been trading for years, and they decide to open a branch in Ireland. So, what is the accounting treatment on that? They also do the accounting in Ireland. So, are they also going to be taxed based on the trading they did in Ireland and in UK as well? I don't understand that part.
Okay, then here we need to look around the parent, subsidiary, or branch office and where they control from. The control rules apply.
It's controlled in UK.
So then, of course, UK rules will be applied.
Okay.
Then, of course, they can, if they are paying the taxes there, they can claim the relief here in the UK. Yes.
Okay.
So if there are the losses in other branch in other part of the world, yes.
Yes.
So they can get the relief here.
Okay. Okay. All right. Thank you.
Welcome. Because a lot of rules after the Brexit, because VAT, and if they registered there, they registered here, and we used to call not import export, we used to call additions, yeah, and that's which we used to manage things. No, of course, a lot of rules is changed. It's a matter of further we can look around in that scenario, and we can advise to clients accordingly.
Okay. Okay. Thank you.
Okay, so please in the chat box, I'm going to share with you the books. Okay, so please, we a lot of handouts we are using for the model. We have I'm sharing with you F6 books. Please ignore the fun because on these books, maybe finance act is quite old, but we have to pick the scenario and look around the rates. Huh? Rates always apply the new year rates if you have that, but that give us good ideas because the rates carry on changing. I'm giving you you need to doesn't matter because we're not doing exam, we're doing assignment. You can say I'm applying these rates this finance year. If you're doing any previous finance year, that's no harm. You can. There's only the examples we need to include, which we can pick. I shared with you, which is F6 of ACCA Kaplan Resource Bank. I'm going to share with you the please, if you click, you can download them. These available on our Moodle page as well. And plus, we'll give you sample assignments to look, and you can add, example. Okay, so please here is the ACCA handouts, which is a lot of examples about tax calculations and different scenarios. Those we can use. So just please, you can download it. Sharing two things more here before we summarize to and then link to the book. Okay, so please, if you're using any of these handouts, yes, so you can find plenty of examples. This is a previous year Finance Act 2023, which we can use up to 31st, yes, following year. That's which we need to be look around, and you've been given lots of examples. You've been given the rates, please, here, and then you've been given a little examples these, and with the calculations as well. And if you control F and anything you want, saving, yes, you want investment, so you can look around the examples accordingly. When we do assignments, so we can look around some of these calculations. So we can look around inherent tax, and second, I'll download for the latest book. I'll share with you as well. Okay, so please, I advise you, if you, and this is for the sake of your interest, of course, when you practice and you're dealing with a client, it can be various scenarios. As much knowledge we have, always good to be. And of course, when you carry on doing day in and out, then of course you carry on becoming competent in those areas. So please, I'll share with you the booklet, and if you want to attend the webinar seminar, either ACCA, ATHE, SEMA, especially for financial accounting, prefer to be ACCA, ACA. Okay, so I'm sharing with you this booklet. Can you see all? Okay, so please look around today. We are looking the area today. Our discussion is the UK tax system and the residency. So that's, which is good to be. Then we looking NI, so you can go in NI section, which will go through all, in the following lesson, we will go through the calculation side. And please, chargeable gain. If you're looking inherent tax, so you can pick examples, when we'll do assignment, so we can add, VAT, value added tax, we look around the 85, we look around different tax VAT schemes, cash and annual accounting. So please, annual accounting and the cash accounting, which we can use, which in the next lesson will summarize these, into, and we'll go through some examples in different VAT schemes. So please, that's, and please, VAT, we can claim back. If you're not a resident of any country and you went abroad and you bought something like laptop, desktop, whatever, you bringing into the UK at airport, if you have the VAT receipt, you can claim back the money. Yeah? If any visitor come to see your any family relative, so please, you can advise them when they're leaving the country at airport, they can fill the form and they can claim all the VAT back. Another part of the world, VAT is called GST, General Sale Tax, so which we can claim back as well. Okay, so that's, is good to look around. And I'll give you this one in a minute. I'll share with you. It's good to. Okay, so please, have you managed to download these documents? If you want, please, and you can, or either you can download from our Moodle page. I share with you in the chat box. Either you can download from the Moodle, wherever is convenient for you, as you want. If you think you need to explore some scenarios to look at. Okay, so that's all from my end today. And the next lesson, we look some calculation side and we go through our LO2, and I will speak to you all during our next lesson. And have a lovely weekend. Anyone, any question? If you have, please, we can explore and we can go back to, but otherwise we'll keep it. So today our key discussion was the resident. We discussed about the saving and we look around the overseas element. And parent subsidiary associate element. The parent is on 50 or more percent, and then associate 20 to 49%, and then of course the simple investment and the tax implications, and the control and where we manage the company. Okay, thank you.
I'm sorry, excuse me. So could you also send this to our chat group?
Yes, I send you now.
Oh, okay. All right. No, not chat. I mean WhatsApp group.
Oh, WhatsApp. No
yes.
problem.
All right. Thank you.
Thank you. Thank you. Thanks for the nice to meet you
Thank
all.
you, Mr. Anjum. Thank you.
Thank you. Bye bye.
So,
Bye.